Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Hi, everyone. Welcome to a very special episode of Facts versus Feelings. Ryan here. Sonu is on spring break. He's halfway around the world right now. And then next week, I'm on spring break. I'm not quite going that far away, but what we're doing something special here on episode 128 of Carson's Facts versus Feelings. Last week on March 19th, we did a really special live stream of Facts versus Feelings in honor of Women's History Month. We had four of the great leaders in our industry. So what we're going to do the next 2 weeks here on the podcast, we're going to kind of split it up, take 2 and 2, and talk about all the different things that we discussed on that very special live stream. So this particular episode, we're going to take Lindsey Bell, the Chief Market Strategist over at Clearonomics. Lindsey's been a friend for a long time. She brought a lot of macro and, markets view, and she actually just recently changed jobs. So we learned a little bit about that. And also the second part of this, today's Facts versus Feelings, we with Debbie Taylor. She is our Chief Tax Strategist here at the Carson Group. And we're all the different ways that, you can use, listen, people hear taxes, they kind of think, I don't know about that. Well, there's a lot of stuff that Debbie does with her very successful company, working with us here at the Carson Group. And she recently joined Carson Group officially as an office. And she'll get into all that stuff. But it's a really fun discussion. I think you're going to like both of those. And then just getting to it just for a minute or two, kind of how we see the markets, right? As hopefully listeners to this podcast know, we said, maybe get a little indigestion, maybe get some late February volatility, early March volatility. Sentiment got extremely lopsided. I welcome you to go to our blog, carsongroup.com/research. We're writing daily blogs on there for more real-time analysis. But wouldn't it be something if we got another mid-March madness low, right? March of 2009, a major low. March 2020, a major low. March of 23, the low with the regional bank crisis. We had the 10% correction. And as we've talked about, most years have a 10% correction. We didn't have one last year. We thought we'd have one this year. We did not expect, say a 15 to 20% correction or even outright bear market. We don't think that's the case. We pulled back 10%. Now we've had a pretty good rally. At the time I'm recording this, Monday, there's been a pretty nice rally, right? Let's see here, Friday the 14th, and then St. Patrick's Day on the 17th. We had a really strong breadth, right? I call it buying thrust. To keep it simple, more than 90% of all the stocks in the S&P 500 were higher those 2 days. That tends to mark kind of the worst is over. Doesn't mean it's going to happen this time, but we've seen some potential follow through. So that's kind of the high level view. The Fed was last week, didn't rock the boat. Honestly, the takeaway was they weren't as hawkish as feared. I don't think they were all that dovish, to be honest, but the market's reaction was positive. So Fed's out of the way, earnings season's out of the way. Now we're kind of entering some positive seasonals, along with the over-the-top negative sentiment that we just saw that usually marks some fairly significant lows. The AAII, that sentiment poll of individual investors, 3 weeks in a row above 55, or I'm sorry, 4 weeks. 4 weeks in a row above 55% bears. That's never happened in history. The previous longest was 3 weeks in a row, literally ending the week the March the great financial crisis ended. So we're not saying people are as worried now as they were during a financial crisis, but I'll tell you, there's a lot of worry and fear out there. Expectations are lower with any good news at all, and we're optimistic around here. We think there'll be some good news, whether it be on trade front, economic front, inflation front, Fed front, whatever it wants to be. Get some good news, we get a rally, and that's kind of where we are. So that's the high-level view of what's going on, a little quick version of Facts versus Feelings. But now, without further ado, episode 128 of Carson's Facts versus Feelings is coming to you. Again, we recorded this on March 19th. I believe Lindsey is first. I hope the part with Lindsey's first. If not, the part with Debbie's first. One way or the other, you're going to really enjoy these conversations we have with Lindsey and Debbie. We thank both of them for taking time to join us. Here we go. Take it away. Thank you.
Hi.
Hello. Hey, Lindsey. How you doing?
Good. I mean, I was expecting a little more upbeat music there.
Well, Markets are rough,
It's March. It's March, and it's still cold in Chicago at least. So,
Yeah.
Where are you, Lindsey?
So, well, this week I'm actually in New York City, but I'm based out of Charlotte. So, yeah, I'm with the team in New York today.
Awesome. Well, that's what we're going to talk about. We're going to get right into this. Again, Women's History Month, the special Facts versus Feelings Live. We've talked to Lindsey. We've talked to you a couple times, right? Different places, different ways. Excited to have you on the podcast. This is the first time that you've been on Facts versus Feelings, I think, right? I think.
Yeah,
so.
This is my first time.
Okay.
All right. Welcome.
So go easy on me, okay?
You only got 25 minutes, so we'll get into it. And that's what we want to start with. We live in a world of compliance. We like names and titles. So give your name and title, but you just changed jobs. Tell us about that. That's I'm looking forward to hearing about this.
Yeah, so I'm Chief Market Strategist at Clearonomics, and Clearonomics is what we are is we're a platform for insights and information and charts and communications for advisors. We talk about the macro and we talk about markets, and we make it a lot easier for advisors to do that by providing them with the tools and the information, and we arm them with the data and the charts that they need to do that very simply and seamlessly.
So I'll let you jump in 1 second, Sonu. So I met James, I don't know, 2018, 2019, right, when he was starting your company, or his company, I should say. And I was always a fan, right, watching what he was doing, building. And when I saw you were going there, like within 10 seconds, I was like, that's perfect. Like, that's an awesome fit for what they've done. And now you can go out and do the strategy side of things and lay on and work with advisors like you have. I thought it was an amazing fit. So congrats to you and James, I think, on what looks like a great hire and hopefully a great move for your career. I was pumped for you. But Sonu, we've got less than 25 minutes now. I don't know what the clock is. Let's start firing away.
Let's actually, we'll take it from there. Like Ryan and I do a lot of this. It feels like our day job, even night job, maybe more night job, is to make charts and get a handle on the data.
We're busy during the day.
It's a night job. Yeah. So, like, why are charts and stories important? I mean, the stories come out of the charts, obviously, but from your perspective, that's what you all do, right? That's what you give advisors. Curious, like, why is that creating that narrative using charts important?
Yeah. I think everybody, you both would agree that it's using charts is really a visualization of making a story come to life. And it's all about, our business is all about storytelling, right? If your clients can't understand what's happening in the market, it really makes it more difficult for them to trust you, right? So I think that being able to tell a clear, concise, crisp story with charts, some people are more visual, others are less so. But either way, just being able to see the trends over longer periods of time, because that's what we're promoting, right? As long-term investing here. It really kind of helps. I think it helps clients really zoom out to understand what's happening in the world.
Well, long-term perspective is great. Absolutely.
I've made a career making charts and telling stories. So clearly I agree on everything we just said there. I listened to you with Joe Fahmy. I don't know when that was. I just listened to it the other day. That was an amazing podcast. Definitely check that out later if you guys want to learn a little bit more about Lindsey, and Joe's podcast is awesome. I love that story of your career, because obviously this is Women History Month. As a female in the industry, you kind of, you had an interesting career. Trust me, here's where I'm going with this. I've been fired. I've been laid off. I've had an interesting career. People see us on TV. They go, oh, that was an easy ride. No, like I was broke. I was unemployed. No, it was anything but easy to get where I am. And just talk a little bit about a woman in finance, but also just your career kind of bouncing around, because I think it's important to remind everybody it doesn't always go the way you think it's going to go.
Yeah, I would say I definitely did not have a straight line path from college to being chief market strategist at Clearonomics.
You didn't?
Yeah. And not only that, it wasn't like directly or clearly planned out either. I kind of had to go with the flow at certain points in time, but I was also very when I saw opportunity, I jumped on it, or if I knew it was time to make a change, I did that. So I've done a couple of different things throughout my career in financial services. I'll highlight one. I think one pivotal change for me happened when I was in my late 20s. I had this opportunity to go from working with institutional clients in investment banking and sell-side research to work with Jim Cramer at thestreet.com. So I was making this pivot from institutional speaking that language to speaking to retail investors. And I was working on his charitable trust to help manage his small cap and mid cap charitable funds. But it was at thestreet.com, which was a small media company at the time. And it was going to be a major pay cut for me. But I thought the opportunity was really interesting. And I didn't know it at the time, but it was very critical and pivotal in my career, because with that opportunity, working with Jim and the other folks there, that's when I really got into doing media. That was the first opportunity I had to start doing videos and talking with people through different mediums like this. And I don't think that if I didn't do that, I wouldn't have the opportunities that came after that got me to the seat that I sit in today. And so that was very important. However, I did get laid off from that job.
Exactly. It happens.
So it happens. And I mean, it was like, now I feel like you get laid off and it's like no big deal. Everybody's used to getting laid off. But back then it was still kind of a big deal. The company was downsizing, but it didn't feel good at the time. But anyway, it's just, I think too, like this type of career, it's a collection of meeting folks like you, Ryan, and Sonu. I've got to know you a little bit better in more recent periods. I think it's just, you build a community throughout your career journey. And I think that the longer you're in the game, it helps to kind of shape you as a person, but also shape your career too. And I think for me, every step of the way was getting me closer to working with the people that I really enjoy working with and doing the things that honing in on doing the things that I really enjoy.
So we actually reached out to Stephanie Link also. She's on spring break, and I know you worked with Stephanie at the Street too, right?
Yeah, she was there. And so I would interview her and Jim Cramer on camera. It was like I was like in my 20s. Okay.
I mean,
so it was kind of nerve-wracking.
Jim's the greatest talker ever, and Stephanie's the most prepared person I've ever seen for anything. Like, you cannot fool her. Not that you try to fool her, but she is. If you're with her, you better bring your A game. So anyway, that's awesome. Well, go ahead, Sonu. That's a great reminder to the listeners that careers don't always go the way you think they're going to go.
I always think serendipity in this business is underrated, because you want to meet as many people as you do, and you never know what comes out of that, right? It may be 5 years down the road that person you met 5 years ago, that plays a big role in your next big career move or whatever it is, right? So let's tell young people, I mean, believe in serendipity. I mean, you may not appreciate it now, but at some point you will.
Yeah, right? No, I always say, like, always, people are always watching. So a lot of young people will think that it's like, you need to network with the people in direct proximity to you, whether it's on your team or, your surrounding team, but it's everybody around you is watching what you're doing. And, you have to put your A game out there at all times, even when you think nobody's looking, because somebody is, and you don't know, like you just said,
someone's always hovering.
Right. And that could turn into an opportunity. Like you said, 5 years down the road, like, you might've forgot that you interacted with this person, but they didn't forget you.
You mentioned something dear to our hearts, and I'm joking, but mid and small caps. You're managing mid and small caps.
Oh gosh, we have to
spend 20 minutes talking about that, but we won't. But let's just start with markets. We've had a little bit of volatility, 10% correction, and we've rallied today. I mean, the Fed's going to meet, in a couple of hours. This will be on the podcast as well. So we're recording this at mid-morning, March 19th for everyone listening. So this is before the Fed news and all of that. We've had some volatility. Do you think it's kind of like it's not a trick question. You can answer it any way you want. Do you think the lows are in for the year, or is there more to come? Condition. I know there's not a perfect answer.
This is the easiest question I want to ask you too, by the way. What a hard question.
Let me get my crystal ball out.
Yeah, exactly.
It's hard to say, but Ryan, I know you do a lot of analysis on this. Like, the average decline in any given year is 14%. Or the average correction is. And so that, like, what we've just went through it was swifter than we've seen in the past, and it felt really uncomfortable. But it's actually a normal part of investing. It's a feature, not a bug, right? It was at the bottom. I'm not entirely sure, but what I like to look at, as you guys know, I'm a fundamental analyst at heart. That is my background. And when I look at the fundamentals that have supported the stock market up until the start of this year, they're still really intact. I think what got investors shaken up was obviously the tariff narrative, ramping up and escalating over time. And the longer that it has done that, has really changed the narrative from tariffs are, could potentially impact inflation to, oh my gosh, is this going to be a slowing growth story? But when I look at the fundamentals, we've still got earnings growth. It's double digits for the year. And I know a lot of folks will come on, and you guys know I spent some part of my career like really in the weeds of earnings numbers, and I still do lean on earnings growth because it is, as Larry Kudlow says, the mother's milk.
That's what drives returns, especially over the long term, right? Profits.
Right, exactly. Well, and so we're looking for double digit earnings growth. It's come down, but guess what, guys? That's what happens in the first quarters. Earnings expectations get reduced because analysts are over optimistic, usually coming into the new year in most years. And so they need to kind of correct their expectations, but they don't do that until after they hear outlook and guidance from the companies that they're covering, right? So it takes a little bit of time to filter through the system. And usually it's the first quarter where we see the largest drop in earnings expectations. And so this is a normal course of business. Of course, we need to see what happens with tariffs. There's a lot of uncertainty about how that filters through the system. We saw in 2018, and we saw with the pandemic that rising prices were pushed onto the consumer. This time might be a little bit of a different story. That's not the only way you deal with higher prices, right? If they even go into effect, or at what level they go into effect, they can be absorbed by the supplier, they can be absorbed by the corporation. So I think there's a lot of moving parts, but you know what? I'm sticking with earnings growth is still positive. People still have jobs. There's opportunity for them to switch jobs, and wages are growing. And if wages are growing, people are going to spend. And we heard that from Bank of America this morning.
Oh, well, great. Did you go to the University of Pittsburgh? Where'd you go to college? Was that?
Yeah, I went to University of Pittsburgh. I grew up in Pittsburgh.
I thought.
So I stayed local, and then
did they make the tournament or not? I don't. Honestly, I'm not. Did they make the tournament or no? I don't think so.
Know.
Basketball tournament? I don't think so. I don't think they did. See, I'm a Xavier guy. I got my Xavier pin, so I got to give Xavier a shout out. But good luck to all the March Madness brackets out there.
I won't have adventure, I guess.
One thing, Lindsey, I was playing with numbers. That's what I do. Like only twice. So this last 75 years as the S&P 500 peaked the month of February. We did peak on February 19th. We had a 10% correction. I guess our base case, it'd be rare, I guess, if that was the peak for the year. I still think there's some better times coming. One thing we like to talk about a lot, and I know you did with Joe and talked about it, the productivity that we've been seeing is a positive development. Kind of layer in inflation and productivity. How you see those two things. Those are things we talk about a lot on this podcast that I think I'd love your take on.
Yeah, so productivity has been on the rise. I know the latest reading was slightly softer than the above 2% range that we saw, but I think that there's opportunity for that to increase, obviously, with the developments of technology and AI. And I think that what we saw at different periods of time in history is that productivity has played an important role in earnings growth and economic growth in particular. And what we did see is, in the 90s in particular, I've been looking back at the 90s in comparison to the period that we're in, we saw productivity was above 2% in the decade of the 90s, but it really took off in the second half of the decade as technology changes really sort of kind of became ingrained into the everyday lives of individuals and in businesses and things like that. And so I think what we're seeing now is we're seeing good increases in productivity, again, above 2%. But there's a potential, if we see that tick even higher in the latter part of the year, the important thing about productivity gains is hopefully those are passed on to consumers in the term of wages, right? And wage growth, like I already talked about, there's significant correlation between wage growth and spending, consumer spending. And so if wages are growing, especially above inflation in a real wage growth environment, we can really see significant economic growth because, as you guys know, the consumer is 2/3 of the economy and very important aspect of the economy that we're keeping a close eye on in the near term.
Yeah, no, we've been in the camp that, productivity growth is running above trend. And with that, you can have, to your point, right, strong wage growth, but crucially with low inflation. And some of the companies never pass all the productivity gains on to workers,
No.
but which means some of it also goes into margin expansion. And that matters for earnings, going back to something you were saying, connecting it back to that. But, to that point, I was just looking at, last night, I sent out some data to our advisors and our team about industrial production, right? Going to the productivity piece, high-tech equipment spending was up, actually high-tech equipment production, not spending, production. So they're making all this stuff, semiconductor chips, things like that, EV batteries. That was up 26% annualized over the last 3 months. Wow. It's running well above trend, right? So that's the stuff you want to see for that productivity piece to continue above trend. I'm curious what data you're looking at right now to determine. I mean, it sounds like you're in the same camp as we don't think there's a recession. You mentioned layoffs are low, things like that. I'm curious what you look at to see, where we are in terms of economic growth.
Yeah, so I mentioned a handful of them. I always start with earnings because that's just my upbringing, I guess. But then I go into the labor market, and I know that payrolls, and I know that payroll and unemployment can be a lagging indicator and has historically been viewed that way. But still, you can't deny that unemployment is at 4.1%. It's, historically low levels. I also believe that from a consumer perspective, you got to look at the job openings report. And what you're seeing there is 7.7 million jobs available. When the consumer has job opportunity, it makes them a little more optimistic. I know the consumer has been very pessimistic as of late, according to some surveys.
They were pessimistic in 2022 and 2023 too, right?
Yeah, exactly. So I'm always looking at the consumer. But I look at wages because, again, I talked through that already. Some of the other things too is I like to look at the bond market too. What's the bond market telling us about the economic outlook? Because those are folks that we're the optimists in the room, following the equity market primarily. But the bond investors, fixed income investors, they get paid to worry, right? So they're always the ones looking for around the corner, looking for what shoe's going to drop next. And when inflation has been a major key a major driver for the market over the last several years, and obviously driving Fed monetary policy, which we're going to learn a lot more about tonight. But when I look at in the inflation indicators, the break evens, the 5 years, the 10-year forward looking indicators in the bond market, inflation expectations have fallen since January. And that compares to consumer expectations are taking off, which is concerning. So there's that difference there. And I think the difference is that the consumer really is telling us they can't really withstand more price increases without greater wage increases. And so I think that's the sentiment that we're seeing. But also further looking at bond spreads, I know they ticked up a little bit, but they're still very low versus historical averages. And then also, if we have this major growth scare, if we think that there's really going to be a massive slowdown, how come the expectation for rate cuts hasn't really moved? I mean, we were at one point, there was an expectation for one cut. The Fed's been at 2. I kind of don't think they're going to change their stance on that today.
And if the policy is still meaningfully restrictive, even if they cut 2 times, it's still presumably still restrictive.
Exactly. So that's kind of where I'm looking. And of course, I look at some of the leading indicators too. There's a handful of them that are still in positive territory versus, like you mentioned, industrial production, some of the manufacturing stuff. It's questionable. There's been some pull forward there. But what we have been seeing before the tariff stuff started happening is you were seeing this is supposed to be the year that manufacturing was supposed to heal and start improving, right?
Now, I asked Ryan this question yesterday, so I'll ask you the same thing. Scale of 0 to 10. And 0 being you're not worried at all. 10 me, Ryan, you want to 10 is Harry Dent level of
Harry Dent level worry is level 10. That's our joke.
How worried are you? Economy, markets, you can take it, you can separate it if you want, put it together. It's up to you.
So I'm like a 6 because a little over neutral, and not super optimistic. Here's the thing. I do worry about the consumer because, when you look at the consumer, I just talked to, they are really worried about prices, right? And and they are seeing wage growth and there are job opportunities. The flip side to that is companies haven't been hiring either, right? They say there are all these worker shortages, but they're also not hiring. So there's a little bit of uncertainty there. And so I think we do need to be mindful of that, because the longer this uncertainty about tariffs and where prices are actually going to go lingers, the consumer could become more anchored to higher inflation. It becomes a self-fulfilling prophecy, right? So I do look at that, but that's really the main place where my concern is. Offsetting that, though, the reason I come down, I'm not further up the scale in terms of worry, is because, look, one of the things, what could go right is the question we need to ask ourselves, right? There's so much worry and uncertainty in the market about tariffs and the negative impacts of tariffs. But it's almost like we've forgotten. I mean, you see the market pop on days like the days in the past where Trump has like kind of pulled back his rhetoric and his stance on tariffs. You see the market pop then. So to me, it tells me that that side of the coin hasn't really been baked into the markets. Also, we can't forget there still are pro-growth policies that are key components of the Trump administration. The focus has obviously been on the harder side of things, which has been tariffs and immigration and things like this, Border Patrol. But the Tax Cuts and Job Act is currently working its way through the system. For whatever you think about DOGE, they are working on deregulation. I think we should be hearing a little more about that in the coming weeks. And so week or month or something like that. So there are other things, like these policies have not been completely forgotten, and they're not going to be like not addressed. So, I just think we need clarity, and I think you just got to stick to the facts, facts versus feelings. Let's get all off the feelings and into the facts.
It is amazing how quick this goes. We've got only a couple minutes. I've got one job to make sure we stay on time. It's like our friend Neil Dudd at RenMax said. He's like, when President Trump won, we expected deregulation, taxes, and tariffs in that order. It hasn't been in that order, is what's kind of upset the apple cart a little bit. Is James around? Can you wave and get him on the screen, or is James not in the same room as you? Where is he? No?
Let me slack him, see if he'll come in here.
He can say hi for a second. So we do have to stop in a couple minutes. I mean, for a let's say a little girl, 13-year-old girl who likes stock market, what can she do in the world of finance, you think, to be successful like yourself, Lindsey? And maybe James will come say hi too.
I think you just gotta read as much as you can and try to learn as much as you can, but then also meet people in the industry and talk to them, because there's, like, we both agree that there's not always a straight line. Come on in, James. There's not always a straight line path. And
1 second, James. I want you to say hi in a second. Let Lindsey answer this. We're going to sign off.
So there's just not always a straight line path. So I think it's all about meeting people, learning about the different opportunities that are in the industry, because it's not always what you think or see or have heard. There's a lot of different things you can do in this industry.
Love it. Well, this is awesome. James still there? Is he still there? James, you got 30 seconds. Tell us why someone should listen to what Lindsey's up to, what you're up to over at Clearonomics. We do have to end this, but good to say hi, my friend. What's up with Clearonomics?
Yeah, great to see you, Ryan. Yeah, great to see you, everyone. At
30 seconds, though, James. I'm cutting you off, man. So let's hear it. The elevator pitch. Let's hear it.
Yeah. I mean, Lindsey is one of the best in the industry, as you guys know. I mean, she joins a fantastic group here on this panel. We're just here to help advisors talk about what's happening in the markets, to complement a lot of the fantastic research that you put out at Carson. So whatever we can do to help, we're here.
Awesome. That was great. Well, thanks, James. I said it was a great hire, and I think you guys are going to do awesome together and build the team. So, Lindsey, thank you so much for joining us. You set the bar very high. We've got 3 more guests coming here over the course of 2 hours on Facts versus Feelings.
You know what I have, Ryan?
History Month. Oh, Sonu got a milkshake. I need to order a milkshake.
I got my milkshake.
Lindsey. When we do live streams, we get milkshakes. I'm behind on that. But Lindsey, any final words, and then we're gonna go to a commercial.
No, thank you for doing this. This is so fun. You raising women's voices in the industry, and I love that. I'm glad you thought of me. This is fun.
Absolutely.
Thank you
Lindsey, best of luck with everything. Reach out if we can help. We're fans, and good luck with the new gig, as they say. You made it, Debbie. How you doing?
I'm great. How are you guys doing?
Good. Nice to see you, Debbie.
So far, so good. The first one down with Lindsey, and now we're really excited, Debbie, because we started a tad early, which is awesome. We've got a little extra time. We got about 28 minutes, and it's a hard 28 minutes, or we get in trouble. So you know how this works. First off, who do you have in March Madness? Do you get into March Madness, Debbie? I mean, what are we thinking?
Before I hop into March Madness, sort of interesting that you're talking to me about March Madness, but before I hop into March Madness, I want to do a call out to Clearonomics and Lindsey and James. So we've been using Clearonomics for a while here in our office, and we are huge fans. I've written a bunch of articles on Clearonomics.
Nice.
We have their chart book coming in every single morning to the office. We use their videos. So they've done some really nice work. And so anyway, I just want to do a shout out to them.
Fantastic.
No, that is awesome. That's great. Yeah, I've known James for a long time, so I was excited when Lindsey joined up. All right, so let's start having some fun. Debbie, you know how it is. We like titles around here and everything, but let's go with your title. You kind of have I don't know if it's a new job, but maybe a new boss. I don't know. I mean, you know what I mean. Maybe a new boss. Talk to us a little bit about
that Burt White guy.
Yeah, Burt White guy. We'd be nice to him. He might be watching. We'd be nice. I don't know. Although I think you can say what you can probably say whatever you want to Burt. We have to say yes, sir. You probably can push back a little more.
It'd be nice to him after all this time.
Yeah, Anyway, so talk to us a little bit about your career and kind of how you've always been with Carson, but what you're up to now to help advisors, and we're going to get into all the other stuff. But we're just excited you're here, Debbie.
Oh, thank you. Yeah, I mean, real quick, because I feel like some of that stuff's boring, but I don't know. Yeah, I mean, I've been doing this now for almost 30 years, and I became wholly owned with Carson as of January 1st. So I built the practice. We have 10 people here in Franklin Lakes. And, we're basically $400 million, although the market's hurt that a little bit over the last couple of weeks. And then, I became wholly owned. And as of January 1st, then also chief tax strategist. And I'm also, a CPA and a retired attorney.
Wow, that's great.
That's all?
So it's been amazing listening to you just over the last few months since you've taken on this role at Carson and talk about taxes, and I think our investment team especially, I'm biased, right? I'd like to think we think a lot about taxes too, and so it's really exciting to have you leading this effort at Carson and talking about tax alpha, right? Tax alpha is different from the alpha, say Ryan and me and Barry and Grant.
Sonu, we have an intro for Debbie. We didn't use it.
We did.
We want to use your intro. Sorry, we get so excited to talk. Tori, I'm sorry. Let's just play the intro now. Yes. I want Debbie to have the proper intro. We should have given her. We screwed up already. Here's your intro, Debbie. Sorry. Maybe not. Well.
Oh, the intro already went.
Oh, it did. Oh,
it did. We weren't paying attention.
We're just screwed up all over the place. All right, never mind. Sorry. Anyway.
Wait,
where were we? I'm sorry, I jumped in.
Tax alpha. Debbie, why do you think tax alpha is important? How do you think what do you think advisors can do to generate tax alpha, which is different from investment alpha, the way we think about it, right?
Yeah, I mean, there's so much, Sonu. Like, that's a total loaded question, right? And ironically, I just got off the phone with the guys from AQR, which, just
good friends.
Yeah, I mean, there's just so much opportunity there, and that's just one little sliver, right? So I think taking a step back, right, is, when we think about wealth, I think about wealth as a 3-lane highway, okay? And even Burt, by the way, now is talking about the 3-lane highway. So he's starting to steal my stuff. Ryan, does he steal your stuff? Because he's stealing my stuff.
I mean, there's
an old question right there.
There's an old saying I've always used. If you take it from one person, it's called stealing. But if you take it from everyone, it's called research. I think Burt does a lot of research.
I hope he doesn't listen to this.
Sorry.
This is going to be 25 minutes of what do they call it when you talk trash about somebody in front of them?
Roast.
Yeah, it's been a 25-minute roast of Burt White. So anyway, it's basically the way I think about wealth is the 3-lane highway. The first lane is investment management, which is the area that you guys really focus on and do such a great job in. And it's not to say that you're not thinking about other areas, right? But your main focus is investment management.
Sure.
Then the middle lane or the second lane is financial planning. And, we know people who are, working in planning, right? And I think of planning, by the way, just aside, in 2 ways, is accumulation and distribution, right? And I think the planning profession has not done a good job in talking about the distribution part of it. They've done a good job in the accumulation part of it, right? Okay. So one of the things I'm trying to bring attention to is the distribution part, which of course a lot of taxes play in there, right? And then the third lane is family tax planning. And I call it family tax planning because it looks different for everybody. And so even if Sonu and Ryan had the same exact balance sheets, your family tax plan would look different. Even if your investment tolerance was the same, and we put you in certain Carson models or whatever, like, you know, Sonu, and I don't know much about your personal situations, right? But Sonu's married, he's got 4 kids, and he wants to take care of
twins. I have 8-year-old twins, that's it.
Boys. Okay. So Sonu's like, well, let me tell you about my personal situation, right? So
I can get a financial plan right here. Right?
Yeah, exactly. It's a 5-minute plan. It's a 5-minute plan. All right. So Sonu's like, hey, I need to take care of like my wife and kids. But Ryan's a player, right? He's out there. He's got a lot of girlfriends. He's got a lot of stuff going on, right? So Ryan's tax plan. Yeah, Ryan's tax plan. You know, hopefully Bert and your wife are not listening to this, right? But you know, Ryan's tax plan is going to look completely different. And so I call it family tax plan because it's highly customized. It's not really easily scalable. But that's what makes you so valuable to the client, right? Because it's not so plug and play. So anyway, so taxes then, you know, really come into play in the distribution planning part, but really that third lane, that family tax planning lane.
I think that's so important, the distribution piece. But to your point, I don't think a lot of people think about that because when they first got, like, we're in the investment side, right? We are thinking about accumulation by the nature of it. By definition, we think about accumulating. How can we grow your portfolio, right? But at some point, people have to take out money. And then when you take out money, you have to pay the Fed, you have to pay Uncle Sam, right? And I feel like what you're doing is, how do we keep more of that?
Yeah. And, you know, it's interesting, Sonu, because for most of our clients, their largest expense in retirement will be taxes.
Wow.
Right? And if you go, like when you sit in during the planning process, they'll say, oh, I want to take a trip to Europe every other year. Can you like bake that in? Oh, I want to buy a new car every 7 years. Can you bake that in? Right? Nobody's like, hey, taxes are going to be my largest expense in retirement. Like, what are you going to do about that? But that's the truth. Absent like chronic like illness or long-term care expense, you know, absent something like that, taxes are going to be your largest expense. So why aren't we being proactive and trying to cut that bill down by millions of dollars?
Right. I have never heard that. That's hitting home right as I speak. That's like,
well, particularly Sonu, if you've got a large retirement account, which so many people have these days, right? Because here's what's happened.
Like an IRA or a 401k, right?
Right. They've done such a good job with the investment management part, right? So you guys have done your job in the first lane. And what you've done is built these huge balances with the market that's cooperating. And by the way, with people living longer than ever before, they've got these huge balances. And you got to, like you're saying, you got to eventually spend down that balance one way or another, or try to leave it to the next generation. And whenever you try to do anything like that, then taxes come into play. And it's becoming more important today than ever before, particularly with this bull market and these huge balances that people have accumulated that even 10 years ago, you didn't see.
Right. So it's a good problem to have. You have a large balance, problem, but there is a problem in terms of distribution and taking money.
There's absolutely a problem. And that's, by the way, and I know Ryan's like chomping at the bit to get to the next thing, but Sonu and I started to nerd out a little bit on this. But and that's also, Sonu, the interesting part about it is that when we walk in the room, when a Carson advisor walks in the room, for some of these clients or prospects, this is the first time that anybody's had this conversation with them.
Yeah.
Well, I'll say this. We have a divided country. We know that, right? We just talked with Lindsey a little bit ago about some of the inflation data. If you kind of lean a little left, you think inflation is going to be higher, lean a little right, maybe not as high. It's the world we live in. But I think one place everyone agrees is we don't want to pay a bunch of taxes if we can help it. I think that's where, no matter what happens in Washington, I think the conversation we're having is important. And one more thing, a little personal note. My dog Mabel, she's 103, I think, pounds. She lost some weight, gained some weight. Great Dane. She's had pneumonia for like over a month. Last night, she got really, really sick. And my wife and I, Emily and I, were like, we better take her to like a 24-hour vet. We did. She is at the vet now getting all this medicine. This pneumonia won't go away. $2,700. You talk about an unexpected charge. I mean, I know what happens is life, but it's like, oh my goodness, I need like dog insurance. I even think Carson offers that. I probably should have bought that. But anyway, so things happen like that, and that's
maybe listening here. So
I'm more ranting. I don't even have a question really. I'm just ranting about this, but hopefully my doggy's okay. Let's talk a little more about that. How do you help clients, or how can you help clients with those unexpected bills? I mean, do you say let's save a certain amount, or do something every month? I mean, because he's big, and I know $2,700. Believe me, it's a poke in the eye, but there's bigger bills that people have that just my brother, he got cancer last year. Trust me, they're dealing with incredible bills they didn't see coming. How can you help someone with things like that?
Yeah. And so it's interesting because I believe that there should be 5 key components of a retirement plan. And component number 3, item 3, is you've got to be prepared for large expenses. Some of them are planned and some of them are unplanned, right? So planned expenses are a daughter's wedding in a year, or trying to buy a second home, right? But then there's unplanned large expenses. And
daughter's wedding tomorrow.
Yeah, sometime, right?
Yeah.
But that could be, unfortunately, a natural disaster. That could be a sickness, right? So you have unplanned large expenses and planned large expenses. And what you need then is a liquidity bucket, a plan B is what I call it. And everybody should have a plan B. And maybe several plan Bs. So that's how you address it, Ryan.
Okay. One thing on that, like everyone, like I usually don't talk about finance and investments when I'm at, with friends and things like that, because like it's too, I can get into jargon and spreads and things like that, but nobody wants to listen to me on that stuff, right? But I think there's a general assumption that, Sonu's an investment, so there's no need of, like, he can do his financial plan. But I actually have an advisor who has been, like ever since I came to Carson, that's when I've had an advisor. And shout out to Grant Nealon, who's my, me and my wife, we work with them closely. And it's been, huge. It's been massive, even though we usually don't talk about, it's weird when we get to the investment piece, because, all of our money, my wife and I, our money is in the models Ryan and I manage. So we don't talk about that, but that's like a small piece of the conversation. And just getting my wife and I on the same page has been, like, I think, a game changer, to be honest. And I feel like that's the value you all bring as advisors to the table, right? In addition to taxes and thinking about everything you're just saying. Yeah.
Yes.
So I was going to ask do you have an advisor? I was going to cheekily ask, or do you do your own?
That's a good one. So just as an aside, by the way, we're right outside the New York City. We have clients that work on Wall Street, and they are liaison portfolio managers. They're hedge fund managers. Right. They have MBAs from Chicago, but they might know one sliver of finance or the investment universe, right? So Sonu, like, more than a sliver, of course, right? But all of this, but then there's all of this that you're not aware of. And also then there's an accountability component, right? You talk about you and your wife being on the same page. There's a whole behavioral finance aspect to it, right? Is holding you accountable, making sure that you and your wife are on the same page. And you could have, all the PhDs in the world, and your wife could, but that accountability component, or helping you with areas that you're not an expert in, that can be priceless. So yeah, like, we have clients that work on Wall Street, and we are hugely valued for some of the work that we do for them. But that's a long way of trying to avoid, no, I do not have a financial advisor. But no, I don't. I do work with my husband. And so there is a lot of accountability there going back and forth between the two of us. But yeah.
That was just a cheeky question. So cover the markets, a little bit. Like, we've had a lot of volatility, and you sent out this really cool note to advisors about, like, what can be done sort of adjacent to market volatility, what they can do without, like, selling everything and going home and just sitting in cash, right? Because that tends to be an instinct for a lot of people when things get scary. But you're like, wait a minute, there are so many other things that you can do when you're faced with market volatility. Talk about that.
I love that. So I call it making lemonade out of the lemons. And how I also describe it to people, and you, Sonu, will appreciate this, and Ryan, is I say capital doesn't evaporate. It just gets redistributed, right? Yep. And then the other thing I say to them is, let's do what the smart people do. There's always a way to make money. We just need to figure out what it is. through every market crisis, right? There were always people that were able to capitalize it and profit from it. And so I want to give clients an opportunity to sort of take back control, not feel like victims, not feel like all of this is happening to them. So when they see the markets going down, I'm like, there are opportunities here, and let's talk about those opportunities. So the piece was 9 strategies for a volatile market. So we talk about tax loss trading. We talk about funding trusts, right? Or doing gifting, right? So the best time to have your business valuation, if you're thinking about, putting your business into a SLAT, right? Or an LLC, is when the market's down, when the business has gotten devalued a little bit. And I'll let you guys in on a little bit secret, and our listeners, is I had my business appraised in the middle of 2022. Okay. Yeah. Exactly. Right. Exactly. Okay. There's an opportunity. And when you do these things, Roth conversions. So you guys will appreciate this. We did Roth conversions. Listen to these dates: in June of 2022, in October of 2022, and in January of 2023, when we had a new calendar year. Okay. And if you remember in 2023, in January, they were calling technology as being dead. Remember that? They're saying out of technology, into dividend, technology is over. We did not agree with them. My husband has a technology background. He was a developer, software sales, and in technology. So we did not agree with them. That was not our house view. I know that was not your house view. So in January of 2023, breaking all of the rules of thumb, because you're not supposed to do Roth conversions in the beginning of the year, right? Like all those stupid rules of thumb. In January, we went back after doing conversions in 2022, and we said, we want to convert before the market bounces back, because we were bullish, just like you guys were. And so in January of 2023, boom, new year, new calendar year, new tax year. And we went back and did conversions for these clients. Even though we were doing conversions in December of 2022, year-end conversions, and in October, went back in January. Those accounts are up double and triple digits, right? Our clients think we're geniuses.
And so it's growing tax-free because it's in Roth now.
Yeah. And we targeted the technology. So now those stocks, those technology stocks, are in their Roth IRAs from 3 years ago. So this is where, the clients then are so appreciative of us being proactive, us being creative, and looking, not all 9 strategies you're going to use for every client, every pullback, but you're like, hey, Sonu, we were talking about, you possibly selling your business. This could be a time to do the gifting. This could be a time to set up your LLC. This could be a time to get the business appraisal. Like the Roth conversions, you've got this $2 million IRA, and you can even do it like somebody's working. They're in a high tax bracket, right? You're like, hey, Debbie, I'm in a high tax bracket. Well, I did analysis. If you do Roth conversions, even if someone's in a higher tax bracket and the market's down 10 or 20%, the market bounces back just to break even. You're basically doing those Roth conversions at a discounted tax rate, right? And that's even just the market breaking to even, which it did very quickly, and then has gone double digits and triple digits beyond that. So that's just some example of it.
Don't give everything away. They have to come to Carson first.
Well, that's what we're going to
talk these secrets.
Yeah, we've got about 10 minutes. I was wanting to talk a little bit about that. Well, 10 minutes ago, this is Women's History Month, Building Community for Women in Finance, a live stream of facts versus feelings. So, Debbie, again, we have about 10 minutes or so. How are some ways that Carson has helped empower you? Yeah.
So I was thinking about that this morning. And so first of all, I believe that a fish is healthy from the head down. Okay. With Bert as the CEO, building this amazing executive management team with a lot of very strong, very capable women. So that has been super exciting, because when you read all the studies about women, women in business, just women trying to make it in the professional world, whether it's finance or something else, they talk about mentorship, they talk about allyship. And at the end of the day, if you don't have women in leadership roles, the world is not going to change. You're not going to feel supported as a woman, as part of the team. You're just not. You want somebody to emulate. You want somebody who's up there as an example. And so, number one, we're seeing women coming to Carson in leadership positions that I admire, I respect, and even including myself being chief tax strategist. So that's one thing that I love to see. There is a women study group. I actually joined it, I think, a week or two ago. And so that's great to see the community of women. There's, the women's newsletter, and then there's the women's conference. I'm going to it next month. And it's called Represent. And so that's really exciting. And so you see some things that are sort of like on paper. And you're like, oh yeah, like, yes, they're checking the box there. They're checking the box there.
Right.
But I will tell you beyond that, I feel like the community there is a very merit-based community, and women who are strong and women who want to be great advisors or great part of Carson are going to absolutely have that opportunity. And I know that. So those are some thoughts.
And that's an aspect too, like women have a lot more wealth now than in the past, and are making decisions about their wealth, right? So, and I imagine there is some affinity too, like people want to talk to people like them, right? However it is what it is, right? I'm curious how you think about that stuff as well.
Yeah, so $51 trillion is going to be inherited by women over the next 2 decades, right? $51 trillion. And they're growing their wealth at twice the rate of men, but they're still investing less than men. Less of them are showing up to advisor meetings than the men. Like, there is data behind all of that. And so one of the things they talk about is having an office that has women advisors in it, so that when you are reaching out to your women clients, they are meeting maybe with a woman as part of the team. And so again, sometimes it's just so simple as that. Like, we can have fancy newsletters and things that have pink all over them, right? But at the end of the day, having a woman advisor or having a woman like on the team as part of your advisory team, that speaks volumes. And so I think there is a huge demographic shift going on here. We know that all the data is there. And again, I love that Carson's out there in front being super supportive of that. But it's real. I mean, we have women more and more that are hiring us because we are women-led. Specifically, they are like, we want a woman. Our branch here is 70% women, which is very unusual. Those numbers are basically backwards of what you'd see in any other traditional office. And of course, a woman founder. And so what we do is different. So our communications, I tell you, I think are exceptionally strong. Women's History Month, we have a lot of celebration for Women's History Month and a lot of work we're doing now. And then also in October for Breast Cancer Awareness Month, we have women wellness events. Like, there's a lot of ways that we are trying to communicate differently and support women on their journeys.
Well, I want to give a shout out to Terry Shepard, our president here at Carson. I know she's stepping away soon to do some things with her family, but she's been the president at Carson for a long, long time. And Terry's awesome. So congrats on a great career and just making Carson better, but our entire industry better to Terry. So we've got a couple.
Thank you to Terry. Yes.
Yeah, we've got a few more minutes. You kind of went this route. I want to go a little more, though. We have a lot of financial advisors that listen to this live stream, that will listen to this podcast, when it plays a little bit later. Why would you've been around? You've seen a lot of places. I'm sure a lot of places tried to recruit you before you became a fully owned office. So I'm trying to say, why Carson? Why should a financial advisor out there come to Carson? Now, this is male or female. We're just opening the whole spigot now. Why should anybody come to Carson to be part of our community?
By the way, they're still trying to recruit me, Ryan. I got something this morning.
Well,
okay.
You're loved. What can you say? There you go.
I mean, they're clearly not checking LinkedIn, right? Okay. Yeah. So I want to pretend that I'm interested in going elsewhere because I need Bert to listen to this and get nervous. Okay. So, but the truth of it is, why should any advisor come to Carson? First of all, and I know I keep talking about this, I don't think there's a better CEO in the industry. Okay. I truly believe that. Okay. I think Bert White is such a visionary. There's nobody smarter in the room. He gets it. He has got a vision I can't even put into words. Everybody's playing checkers. He's playing chess. He's 10 steps ahead. And so, I do believe having a strong leadership team, but having a strong leader with a vision is so critical. So I think that's super important. And I think what we're doing here in the investment department with you guys, and then what we have going on with tax and sort of wealth strategies overall, we are building something that is literally going to be best of breed in the industry. And we're not going to stop until it is. And so, we have Bert's support. We have the executive management team support. I love how all of us are working together, because it's not just the first lane, you, Sonu and Ryan doing investments, and then me over here doing tax, right? It's all of this working together. And that's what we're doing over at Carson. And it is wildly exciting. And it is best of breed. So if you say, Debbie, what are 2 good reasons? I would tell you the best leadership team in the industry. And I would tell you the way that we are building out tax planning and investments, again, is and will be industry leading, and will make you, the advisors, tons of money, will help you close larger clients, will help you build wallet share, will help you service clients in the way they want to be serviced, but they're not getting serviced. And we're doing all of that.
Yeah, to that point, this evening, I think we have a meeting together to talk about, like the folks from planning, investments, and Debbie too, to talk about, how we can present something to a large prospect.
Yeah,
right? Exactly to what Debbie just spoke about. How much time do we have, Ryan?
About 2 minutes. Yeah, not much. It goes fast.
I have one question. You brought this up. That's what got me thinking about it. Why are women, I don't even know this is true, but it seems like, why are women more conservative with investments? And maybe that's not a bad thing, because maybe they panic less than men. That could be the case. Maybe like, oh no, this is happening, let's sell. We have to act. Sometimes it's better not to act, but I'm curious why, if you have any thoughts on that.
So no, I do. I mean, I have a ton of thoughts on women in investing, women in the industry, because I've lived this for almost 30 years now, right? And I will tell you, I know we have less than 2 minutes, but really quick is, from a very young age, women are not educated, and our culture does not encourage women to be involved in money, to be involved in finance at a very young age. Even think about little Timmy and little Susie. Timmy, what do you want to be when you grow up? I want to make a ton of money and I want to run a big company. Susie, what do you want to be when you grow up? I want to make a ton of money. I want to run a big company. And you're like, Susie, that's like, you're a little embarrassed that Susie's talking like that. And so ironically, from a very young age, boys becoming men are encouraged to think, hey, money, math, finance, getting a job, and girls are sent mixed messages. Okay. Even if they have the capability, they're sent very mixed messages from society. And I do believe that that's a big part of it. And then you fast forward and you've got men doing the meetings with the financial advisor, who happens to be a guy in 80 to 90%. And the woman says, Jim's got it handled. My husband's got it handled. And so it becomes this sort of ecosystem, self-reinforcing. And it's a shame, because we also know that 90% of women will be managing their own wealth someday. 90%. So we should be training every little girl to take ownership of her life, to feel comfortable with math, to feel comfortable with finance, even if she's going to be a stay-at-home mom. Okay. But we should encourage these young girls and young women to take agency, because they're going to be managing their money someday. Eventually they all will be. So it is actually sad. And it's one of the reasons you hear me out there so aggressively having these conversations, writing these articles. I will say I have 2 daughters. One of them's an investment banker. It's got her master's in finance from Hopkins. And the other one works here in the business with me, and you guys have met her. So at least with my 2 girls, I feel like I started off okay, but I'd love us to spread this to all women out there, right?
Love it. That's so awesome.
Absolutely. Well, Debbie Taylor, the Chief Tax Strategist at Carson Group, this was an excellent, awesome conversation. And by the way, you reached out to us, I don't know, 6 weeks ago, said, hey, let's do something for
this whole thing came out of that.
This whole thing came from one email from you. So thank you for pushing us to do it. And believe me, we jumped all over it. We love doing stuff like this. So I think it's just another small way of showing the way Carson works. Someone says, let's do something. We just do it, right? And not always going to work, but we're willing to take chances, willing to take risks to make our financial advisors and our partners help them grow, help their clients. And as I think Debbie gave one of the best, 90-second commercials ever for why, if you're a financial advisor, you might want to come over and join us and learn a little bit more. But we have to go. Debbie, thank you so much. Have fun with talking to Sonu in a couple hours, I guess. And I hope to see you very soon. Maybe, Omaha, maybe in May at Partner Summit, probably. So looking forward to that. Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.